Hello traders, Sid here with another weekly watchlist video. And before jumping into this week's stocks, let's talk about what happened in the stock market. So US stock index futures edged higher on Friday at the end of the volatile week, marked by concerns around aggressive moves by the Federal Reserve in reaction to rising inflation and ongoing Ukraine conflict. Now, the growth and technology stocks moved higher in the pre-market trading after taking a hit this week due to surge in US Treasury yield following the Fed's plan to shrink its balance sheet. Now, this week was choppy and we saw some wild swings in the market on Wednesday and Friday. For the next week, I think we will probably see same volatility for Monday and Tuesday, which will set the tone for the rest of the week. Now, I would like to see how price action will develop on Monday to get the good understanding of which direction market wants to lean in. Now, as charted last week, S&P 500 made its move to 4582 and tried to break that level twice before rejecting and coming down towards 4444. So we might see a retest around 4469 before making any further move towards 4500. Similarly, for Nasdaq, it got rejection as expected from 15184 and then it stayed range bound between 14600 and 14300. Now, so going into the next week, I would like to see if market gets its strength back and break above 14500. Now we can correlate these market moves with VIX as it fell below 19 and hovered over 18 for a few days before making its move toward 21. Since then, VIX is making lower lows and lower highs on a 30-minute time frame. So it is clearly in a downtrend, but at the same time, it's making a falling wedge, which is kind of bullish. So if VIX broke through this wedge, then it will make its move toward 25, which will obviously pull both Nasdaq and S&P 500 mini down. So that's it for the overall market update. So the first stock in my watch list is Apple. Now Apple pulled back after failing to break through 180 and now it is kind of like a mean megaphone formation over here. I think Apple will retest 169, 168 level before bouncing towards 172 and 175 beyond that. If it couldn't hold its 169, 168 level, then the next target will be 165. And if it couldn't hold it over there as well, then 160 will be the next target. It has high open interest around 160 strike, which can justify its move towards the downside if that happens. If the market condition really goes against us, then that might happen. Next one is AMD. AMD slides down after getting a downgrade from the Barclays, Deutsche Bank, and the Trust Securities due to sudden negative shift in the demand, signaling from a wide swath of a computer, consumer, and communications OEM, at least some of their semi-suppliers. Now the cut mainly related to the production in second quarters, but demand through the year's second half will remain strong. At current price of 101, AMD at its strong support. If it break below that, then we will see AMD price fluctuate in 90s. But I'm expecting a bounce back towards 105, 110, which then fills these two gaps. And overall, analysts set its price target towards 115. So we can quickly see AMD bounce back towards 115 or close to that level. Next one is Amazon. Amazon pulled back quite a lot after stock split announcement from its recent high of 3405. Now Amazon is in a downtrend and it can easily retest 3000 level very quickly. Personally, I want to see what it does at that level, that is close to 3000 level. If Amazon couldn't hold that level, then we can see it move close to 2900, and if it fell below that, then 2878 will be our next target. The next one is Coin, and Coin is sitting nicely at the beginning of this gap And there are two alternatives at this price point. A, it will fill the gap and then come down towards 156, or it will get a bounce back from 160 level and then move towards 170 to 175. And in that case, if it reach over here close to this gap fill, then this scenario might repeat again, that it will get rejected from this 173 level and come back down towards 170, 168, or it can fill this gap and move high. Next one is Costco. When I charted this in my last week analysis video, it hit both of my price target pretty nicely. Now since retail stores are in a full bull run mode and a Costco is flagging nicely, before making another leg high, it can pull back towards 595 and then 590. If it comes down towards 590, either it can bounce back or it can fill this gap and come towards 585, which can be considered as a healthy pullback at that price point. If that doesn't happen, then it can break this falling wedge, retest 605 and then 612 and move towards all-time high. The next one is CrowdStrike. Now the CrowdStrike shares went up 2% Friday morning trading after analysts remained bullish on this company after they announce their future guidance related to recurring revenue and other things. But in short term, CrowdStrike is setting up nicely for a healthy pullback as it is in this rising wedge formation towards 215 and 209. Considering its current price, it can move towards 230 before giving that anticipated pullback towards this level. Now the next one is CVS. On Wednesday, CVS held reach to $484 million settlement to resolve its claim brought by Florida related to the prescription of opioid medications that were filled CVS pharmacy locations in the state. Now the company said that the agreement does not include the admission of wrongdoing or anything else. So both of the news didn't impact stock prices that much, and the technical analysis clearly shows this nice cup formation. Bulls are getting exhausted a little bit over here, and I think we are due for a pullback. In that case, we will see this pullback towards 105, 104. Since it is in a strong bullish trend, I don't think so if we get the pullback that will be a stronger pullback. It will be a mild one, and probably it will continue its journey towards 108 and 110. Next one is Facebook. Facebook also has a nice megaphone formation, and within that, it's in the formation of inverse head and shoulder. Maybe it's hard to see, but on 30-minute time frame, you can clearly see left shoulder, head, and formation of the right shoulder. In that case, there are two possible scenarios. A, it can invalidate this inverse head and shoulder formation and come down towards 217, which is a lower trend line support. Or the second scenario could be we stay in this head and shoulder formation and push towards 230. In that case, we will be in the process or in the middle of this gap fill formation, and probably we will get another push high beyond 232, and in that case it will complete this gap fill as well. Next one is Eli Lilly, and Eli Lilly has this nice symmetrical triangle or just a triangle formation, and it can move in either direction. So if it goes up from this formation, then I think it will retest its all-time high and then probably make another all-time high. Or if it get rejected from this level, then 310, 308 will be the next level to watch for. Moving on to MasterCard. Similar to Facebook, MasterCard also has this inverse head and shoulder formation and looking quite bullish. So MasterCard can move towards its resistance lines of this megaphone, and at that point it can retest this 355 level, and if we broke through that, then we can start filling this gap, which is between 356 to 362. quite a large gap to fill. Moving on to Microsoft. So Microsoft seems bearish and the bear flag setup validates that. So I'm expecting it to move towards 290. Next one is Netflix. Netflix is another stock that has this inverse head and shoulder formation, which is not quite clear on 30-minute time frame, but it is there if you look closely, and it can validate if it moves towards 360, 362 and gets invalidated if it moves towards 350 and beyond that towards 345. The next one is Nucor. Nucor has nice inverse head and shoulder formation, as you guys can see here. Left shoulder head formation of a small right shoulder, which might get bigger considering if it consolidates within this range for a while. And it also has this nice bull flag on its right shoulder, which indicates the bullishness and possible move towards 152, 153. And the last one is Shopify. Similar to Amazon, Shopify looks bearish and in downtrend, and also it has this inverse cup formation, which might get complete when it reached to 585. Right now Shopify is at 602, but I would like to watch 585 level before, because that's the possible level that it can move, or if it broke below that level, then we have this gap to fill between 569 towards 562. So that's it for this video, guys. I kept it short and concise. If you want me to take a look at any other ticker, then please mention that down in the comment section below. I will upload detailed PDF version of this watch list on my Patreon channel. So if you are not member and if you want to join, you can join my Patreon only for $1. If you have any questions, please ask me in the comment section below. But thank you for watching and see you again next week. Bye.